joining us, Eric Kuby from North Star Investment Management. Great to have you here. Eric, you got some interesting stock picks as always. Just want to get your macro thought real quickly on this market. New highs for the NASDAQ today. It just seems like equities will not break.
Yeah, I mean, the zero interest rate environment continues to provide no alternative for investors. So the default seems to be running back into stocks. And as has been the case for years, everyone loves the big cap tech stocks. So they continue to make new highs. But we are seeing some action in some other areas as well.
Eric, right now, the Russell 2000, if you pull up a 3-year chart, is literally exactly where it was 3 years ago to the day. The small caps right in the middle of their range. Is it finally time for them to break, or do we need to beat the virus first?
Yeah, that's a great question, Oliver. I mean, I think we do need to have confidence about the virus getting beaten before small caps can really have a prolonged run. So many of these companies are so tied to the domestic economy. And, with so much uncertainty, it's really difficult for them to get going. But this extraordinarily performance gap, I think, does create great values in this sector. So if you're a little patient, maybe not have a 1 week or 2 week time horizon, but maybe a 1 or 2 year horizon, this seems like a great time to look at small cap stocks.
Now, on the year, your small cap fund is beating the heck out of the Russell, though. And right now, you guys are positive. The Russell's still negative. Some of your stocks that you have here are up a huge amount. So does this continue? Eric, let's start with one of the big winners here that has just been running wild. It's up like, what, 200%? What's going on here?
Are we talking about U.S. auto parts here?
Yes, exactly, yeah.
Right. So it's interesting. We've followed this company for quite a long time, and this stock was higher than this 10 years ago. They were the first mover in online auto replacement parts and developed a great business, and then it stalled out for a number of years. They brought in this terrific management team, like literally my favorite small cap management team ever. And these guys just really understood e-commerce, and they said this is a business with great bones, but it's just they don't have the right e-commerce, bells and whistles. And they spent a year fixing that with their websites, their delivery times, and they just completely fixed the business. And then, so that was good enough to get the stock really starting to move. But what you have seen is that this has become a stay-at-home winner as well, because you can order your auto parts online, have them delivered to your house, and install them rather than going to the body shop. So they've got a huge surge in demand, and I think it's permanent because I think this is a behavioral thing, and I think people now know that they can buy these auto parts online cheaper. They know how to get them installed, and so I think that this is a business that has really good legs for the next 2 to 3 years, even though it's had a huge run up.
Okay, so this is a name that can continue. Do you take profits after this huge run, Eric? How do you determine for a small cap company how much of its potential market it's already achieved based on this particular scenario that is favorable to online?
So we were forced to take some profits here because it went up so much. Literally, this stock was in the dollar range not that long ago, and it's almost $9. So in terms of position sizing in the North Star Microcap Fund, if we had a 2% position, we couldn't let it become an 18% position. So we've actually been forced against with great sorrow to take some profits here. And again, I just think that these guys, when I first met with them, they outlined a 3 to 5 year plan where they think that they can make this $1 billion company. I think they're going to make it. I think eventually they'll be acquired by like an AutoZone or somebody like that, maybe a number of years down the road. So it may be a little bit ahead of itself or not now, but I think it's going higher in the long run. And also was added to the Russell 2000 last week. So I think you're going to get a little bit more broad ownership through the index there.
All right, so you've got a few others here I want to make sure we hit. Escalade, we've talked before, the update here on the gaming company. We're talking like pool tables and stuff, right? People are, they want to stay inside, or they got trampolines too, right? Because everybody's got to find ways to stay entertained at home.
Yeah, I mean, basically, again, another company that's benefiting from people staying at home rather than going to the gym or, and so, ping pong, pickleball, billiards, darts, archery, just stuff that people could do around their house. Although don't shoot your arrows at your family members. This is just, again, a really good company for the environment that we're in, but also an excellent company in the long run. They've been extremely well run, and we felt particularly good that there's a very large insider purchase a couple of weeks ago as well by the chairman of the board. So even though the stock has moved up, we think it's a great long-term company with great products, market leadership, and we feel really good about Escalade here.
Okay, so Escalade's been doing well. The stock broke out big at $14.50 right now. Eric, once you buy one of these things, one of these games, I don't know what pickleball is, but all the other ones, you buy like a trampoline or something, is that, you don't have to get another one, right? Is this going to force all that market forward again, the same risk point given the quarantine?
Yeah, I mean, I think though it's behavioral. I mean, I think that you don't have to buy a second pickleball set or a second ping pong table, although you may need to get new supplies. But I do think that that more people are going to want to play games at home going forward. So I think that there's a long-term growth in just at-home game playing. Just like it's not obviously as explosive as video games, but it's the same concept. If people are at home playing games, these games just happen to involve you actually moving around and playing a sport.
Okay, and I got one more for you real quickly because we're out of time here, Eric, but I want to make sure we hit Lakeland because it has jumped fast and furiously from $13 to $23. This one is I don't believe we've talked about this one before. I could be wrong, but this is a very specific type of like COVID environment play.
Yeah, so we always like this. We've owned this company for quite a while, and it's been a stock that's gone back and forth in the trading range for quite a while. It is towards the high end of the trading range now, but they raised a lot of money a number of years ago. They expanded their manufacturing capacity, and so that they were able to really ramp up production when the COVID-19 hit, and there was this huge demand for PPE. From a lot of different companies around the world. So this is just a company that was ahead of the curve. They can deliver the product. They're a little bit less expensive on their product than their competitor, and just really well set with new facilities in Vietnam and India. So also they diversified away from China so that their supply chain is not disrupted. They own their own facilities, so they're not subject to a Chinese facility where they say, no, you can't have the garments. So again, I think this is a company that made all the right decisions and just then is in a really good spot going forward also because of what's happened in the world. All
right, Eric, nice job here on the picks, and appreciate the insight and what you guys are doing because it's working right now. Small cap fund from North Star ahead of the Russell 2000 this year. Let's get a thought before we close out the market overall. Thank you, Eric Kuby, again, joining us from North Star Investment Management.